Hi, good morning, everybody. Thank you for tuning in. We'll start in another couple of minutes, just allowing people to stream in. Welcome. Thank you for being punctual and being here with me. Really appreciate it. Stay warm and stay safe. Reduce your travel if you can. Manage it. Just be safe. Yeah, crazy weather going around, and well, we're gonna start a very beautiful Sunday live stream. Prepare for the week ahead and review the week that's passed. Some updates on what to be expecting, and some progress that I've also observed in the share trades section. Pretty good week for most of you, right? And yeah, so I'm seeing things like that, and that's fantastic, right? The feeling of ending a week strong, isn't it? I want you, most of you did well this week. The market was kind, obviously, with some good trades. But my advice, the general advice for some of you who may still be struggling, is to just take a trade a day. Trust me, take a trade a day, and you're going to do absolutely fine. You're going to do very well. If you improve day after day, take a trade a day, you can be able to cut down on your errors, your mistakes, and be able to crystallize each trade much better. But that's the challenge for you, isn't it? By not over trading, by not revenge trading. But trust me, if you can manage with the techniques and the skills that we are imparting here, and you start by trading one trade a day, one and done, you will see dramatic improvement. And I mean it. And many who have progressed and consistently are doing well today, they have started by trading one and done, one trade a day. So I challenge you to do that, and do keep me posted. Obviously, I review the channel every single day. All right, there is a live stream channel Q&A here under SPY trade analysis. Now you have to first make sure that you collapse the channels here, and you will see this appear. If you don't see this appear, just hover your cursor over this, and you will see, right? But otherwise, if you don't see it still, I will just paste it here in the channel. There you go. Right, simply. So you see the Q&A for live stream here, right? So I will cover the Q&A much later in the stream, right? I'll keep today simple. Right, welcome. Now that we're all in, really good to see you. Stay safe, as I was telling most of you much earlier. Stay warm, stay indoors if you can help it. And well, let's go. Today we'll cover some very simple techniques. I want to be touching a little bit on practical techniques. And if you have not watched the first lesson of the course last Sunday, I will put a link in the description. I will remind you, it's in the channel. under lesson 1. There is a new model I want to do, and that is to have some form of daily lessons for members only. I will attempt to start that tomorrow. So do keep a lookout, and I will inform you here. I will just inform you my intentions, and try to organize the content in a more browsable manner. So give me a couple of days. I'll get that done. As I mentioned in the previous live stream, I can't change this yet because I'm still doing some archiving. I think it will be done relatively soon. Getting someone to do it. And once it's done, I can reorganize this, add more organization to the content so you can see in chronological order what are the videos you have to start watching first, for example. And so, this is an open link right in YouTube. So I don't want to be sharing too much of course materials in this link. I'm working on something as well where members will have private access. And that's where I'll be teaching more higher level secrets that I have. But generally speaking, I will start the course. I want to do it daily because I realize if I do it weekly, there is a theory that I can conduct weekly, but I want to have the practical aspects of explaining to you on a daily basis. So I'm working on that as well. And you see that it's in conjunction with the daily analysis, isn't it? So it's something I talked about as well last week. So give me probably another couple of weeks to organize them. I mean, we're here daily, we're here weekly, we're putting in the work, but it's just not as organized as I'd like them to be. So thank you for your patience. I will organize them and keep you posted here. But nothing's changed. We're here almost every day, isn't it? Even on a Sunday, I'm here. So let's get to it. Focus, build your skills, put in the work, and start changing your life. This year, it's still January. So you have to focus and put in the work. Yeah. We've got this. I'm feeling much better, so thank you for letting me rest on Friday afternoon. I was a little under the weather, but much better now. So thank you. A couple of days just sleeping, just getting some rest. And here I am on Sunday, back, trying to make money by studying and preparing, isn't it? You see, the secret is not... I mean, the trade takes 5 minutes. Most of my trades, right? Less than 5 minutes, you can make your money. But truth be told, it's not just 5 minutes. It's hours of work. Prior to that, including today, you tune in, you put in the work, you study. And so when the time comes for you to step on the stage and take control, center stage, even if it's just 5 minutes, you do it with style because you have put in the work prior. And that's the beauty of it, right? And it's lots of hard work, tuning in every day, trading with me every day, studying every day, making sense of things every day. And everything just accumulates, right? Including your knowledge. And so it's important you join a group where you can build up your knowledge. It's something that's stackable. So it's important you build some stackable skills. That when you know you're tuning in every day, you're building on a strong foundation. I keep repeating that. And you're able to build and level up because you have a strong foundation. When you join signal groups, you get none of that. In fact, you decay your mind. What you're doing is, this is ground level. You're digging even deeper. You're loosening your own foundation. And the next time you want to truly build something, you have to fill it up first before you can start building on ground level up. You realize that problem. So just be more careful, not just in joining any trading groups, but even in your own personal life, your habits. If you are not careful, you're not building foundation. Don't take it for granted. Right, your You're digging a hole for yourself. Now, granted, if you're in construction, you need to dig before you put in strong foundation, isn't it? So, yeah, but you get my point. All right, so just be careful. And so before you put in the work, do your own assessment, have discernment, and it takes time to commit, sure. But once you are able to establish that this is the path you want to move on, you commit, you give it your all, you give your absolute best. When I was younger, I was given this. I don't truly believe in it now. But when I was younger, it made sense to me as a young man back then, right? My boss told me this. He said, "We are not living life on the edge. You're wasting space." As an older gentleman now, I don't have that sort of vigor to truly believe in that now. But back then, wow, it made sense to me, right? So push yourself if you can. Be careful not to push to the extreme. I'm older now, so I'm more careful with my time and energy. But for some of you, you can't afford it. Push yourselves to the limit. Because the truth is, as a younger person, you don't know your limits yet. It comes to a point in your life that you probably know where your limits are, and therefore you start to get careful. But you're a younger person, you have not tested yourself, you have not put yourself in that situation to stretch yourself, or to know how good you are, that you have to push yourself. Yeah, push yourself. You got this. Right, thank you. I had to start with a little story so I get more people streaming in, and I'll start proper. Now I'm going to run through some very important things throughout the week, and some review, some simple techniques, right? And thereafter I will prepare you for the week, and obviously some Q&A. Yeah, Q&A. Right, so don't worry, I will cover as much as I can, keeping this within the hour if I can help it, because too long a live stream, especially not on trading hours, may not be ideal. You may not be able to extract as much as you can. Now, quite simply, let's take a look at Friday. Friday, simple, right? Now, a very simple technique. I want you to know this. Right, a simple technique here is closing of cups. Do you see this? This is a closing of cup, right? When you learn about cups closing, some of you are very theoretical, right? You must have that sort of perfect cup close before you consider it a closed cup. In terms of buyers and sellers, you have to understand what does a closed cup entails. So in this case, you have to know that at this point here, right, the reason we sold down, now when the cup has closed, it means that it has went down first, right? If it has went down first, it means that there are sellers at this range here. So far you're following me? There are sellers here. That's the reason why it's heading down, right? So when you know that there are sellers here, you know that if it does taper at the bottom and returns back to that same level, you can expect that will still be sellers at that region. Now, why do people sell at this price? Right, so you have to understand the idea of sellers and buyers. Are they still selling at this price? And if, let's imagine that there is a negative catalyst, all right? If there is a negative catalyst, what's going to happen is that people will decide, oh, we are going to sell at this price anyway, regardless of what happens to the price action. And this is why you have things like your double top, and then it will continue heading down. And by then we will see other structure here And maybe, right, in this case, maybe Magenta built some liquidity, we could grab it on the way down. So let's not worry about the structure that's going down. I just want to cover this concept for now. So when there are fixed sellers here, right, unlimited sellers at this level because of a catalyst, right, because obviously if there's a negative catalyst, everyone wants to sell and they agree this is the price to sell. So I give you an example. Let's say the stock is Intel, for example. Favorite stock for Friday. And say they've incurred a certain, well, in fact, their earnings were pretty good. But say that their future guidance, right, they probably tell you that, they're not going to sell more than $5 billion worth of revenue for the year, right? And someone worked it out that in translation to the stock price, this price level here where the sellers are selling will be $5 billion worth of revenue. So it doesn't make sense for you to buy more, right? So this is one example. I'll give you another simple example. Say, for example, Warner Brothers is going to sell for $56 billion, right? For example, and they decided to calculate the stock at this price range will be worth 56. So if they manage to sell at 56, it doesn't make sense for anyone to buy above 56 billion, right? So everyone will sell at 56. You notice that idea behind it, right? So this is known as a catalyst. So catalyst will create that sort of behavior, right? So in that case, if there is a catalyst, you get double tops like that, and therefore it will continue to sell. But otherwise, there is very little reason for that to be unlimited selling at this range. Very little reason, unless it's a catalyst, okay, or more selling. What's more realistic will be that there will be sellers here. It will continue to have sellers here. And remember, if you're a seller, what would you want to sell at? A higher price or lower price? Sellers are motivated to sell at higher price. Notice that. If you're a seller, you want to sell at higher price. If you're a buyer, you want to buy at lower price. So this level here will have less sellers, but increasingly as you go up, it will get higher. There will be more sellers at the top. You understand that logic for now, right? This is demand supply. It's very simple. And so therefore, in most cases for cups, when they close, it is very, very, very rarely perfect close. Very rarely. On a practical aspect, now people in theory will just tell you, people who don't trade, they just read books, right? They're just going to tell you, the pattern just tells you it's going to be a double top, double bottom, whatever, right? They have no practical experience. But you notice, as I always teach you, the cups will overshoot, will spill over. And there is a reason for that. And I'm explaining that structure to you in demand and supply terms, in buyer and seller behavior. There will still be sellers here, but they will incrementally reduce if the cups truly want to close. You understand that for now? Very good. That's the first thing you have to understand. If the cups can overshoot, that is the first sign that it has overcome the sellers at this range. So far you understand that, right? Now, why do sellers become buyers? That's the next thing, right? You probably heard of this before. How a support will turn into resistance, and how a resistance can turn into support. Now, very simple logic behind this. How a support turn into resistance, how a resistance turn into a support. Now, you have to understand this is very common in trading. You've seen this all the time, but you cannot explain it and you cannot understand why it works. Now, say I decided to sell at this certain price, right? And it broke out at that price. Who's left over here? Who's left over here if I manage to break out of this price? Who's left here? the stop losses are left here. So when you can understand that, you know where I'm going, you know where I'm heading to now, isn't it? When the stop losses are remaining there, they have turned into the opposite order. So you must remember, if you have a buy order, your stop loss is a sell order. If you have a sell order, your stop loss is a buy order. Not everyone is market order. Not everyone is day trading. You have to remember that. Most of them are limit orders, which means when it went past that particular order, right, their stop loss is still active, but it has to return to the price that they have set under limit. Understand that, all right? Now, that is also the premise of a support turning resistance, resistance turning support. It's the concept of the reverse order, right? Or in this case, the stop loss. Now, a lot of buying and selling behavior is based off of this idea behind, and that's why understanding your order books is quite important. All right, now we understand this. I will explain more of this during the course. A lot of this is theoretical. You see this, but I'm teaching you how to practice it. Right, so the theory, I will cover it in a longer course, as I have gone through last week. That's the first lesson. But you'll realize that I will incrementally try to be more theoretical on a weekly basis. But most of you will prefer the practical part of it because this is where we actually make money, right? The practical part of it, applying it practically. I will do that on a daily basis. That's why you see all the analysis every single day and how I can apply the theory into the practical. So I will figure it out to organize all these information so it will be absolutely helpful to you. So now, cups close, as I always say. Look out. Look out for overspill of the cups. And then you realize then the breakout and retrace. Now in this case, this is a breakout and retrace, but there are many cases where it's not that straightforward. You realize this is breakout and retrace. Yes? So I want you to learn to identify structure a little bit more. Cup close, right? As much as you don't see a cup close here, then that's because you don't have that sort of practical understanding of a cup and handle, right? So cup close, and in this case is a breakout and retrace back up. But this retracement is even more beautiful. Why? Because we identify the orange algorithm. In fact, I remembered on Friday, I told you to look out for this orange algorithm, right? Let's take a look. What did I say on Friday? Yeah, right? 9:56, I think this was Friday. Yep, I mentioned in 10:28 we could be grinding up in orange, which isn't great too, right? We already caught the cup. I already caught the cup in handle close, right? So I already caught the trade here, and at 10:28, which was here, 10:28 was here, right? I mentioned that we will probably be grinding up in the orange, which is not too great. So you also notice, you saw the orange, you see, the idea of having penny perfect algorithms to guide you in your trading decision here, right? We already caught the cup and handle. I already had a trade here, and I mentioned it's probably going to grind up in orange. That's the worst case scenario. Absolutely happen, right? So now when you understand this, right, you have the penny perfect algorithms to guide you in your structure. You understand the theory a little bit more, and that's what I'm going to do for you this year, right? I'm going to supplement your understanding even deeper. I will try to pace it in a way that I can apply them practically to you, so that you learn more as you trade and not just have head knowledge that you cannot apply it immediately. So that's the difference from learning from a course and trading together with me, or in this case, I would call it a certain apprenticeship. You learn from someone who knows how to do it. It teaches you the techniques here that no textbook is going to teach you. On a daily basis, live for you to see, you're going to learn something more than reading 100 books. Hopefully that's the case, and that's why I need you to tune in. That's why I need you to show up every single day, review every single day. Now, cup close, retracement. This retracement was easy, right, and helped by the orange algorithm. So I truly don't call this a cup and handle. Not exactly. This is more of a breakout and retracement, right? But the cup was already closed. You know that the sellers at this range here has already started diminishing, and they became resistance, turn support. And you understand why, because of reverse orders. Yes, very good. Now let's take a look at another case of a cup and handle. Plenty this week, right? Let's just cover them a little bit more. Now this one, Thursday. I love this one. Now let's talk a little bit about this. Now, right here, this is something you need to know. Okay? Cup closed. Yeah. You see the cup closing? There was a problem with this cup close, right? Because it is under the tapering algorithm here. But is this a cup close? Absolutely yes. It's a cup close. So you see the handle that has started forming already. Now, this is the case, especially when it comes to end of day. You have to pay close attention. When this happens, and you notice that, right? Because this cup close here, you notice what happens the next day? You notice? It started rebuilding that same handle. You notice that, but it failed. Right? You notice that. So now you know that there are hard sellers here at this range. And when you see a 30-minute chart, on a 1-minute chart, it's hard to see. But on a 30-minute chart, penny, perfect right there. You see it's building liquidity. I will talk a little bit about that in the 30-minute chart. It will make more sense to you. Now, this technique you have to learn. Very important. Because it's a technique you pick up when you learn about zoomies. Now, once again, the cup is closed. I would argue that the cup has closed here. Probably here. Now remember, price is always a range, right? There's always a range in your price. You cannot just be taking it to the penny value, especially on the 1-minute chart where it's wicked. You see here? Right now, I'm going to teach you how to look at candlesticks, but it's not as reliable as most of you who, when it comes to trading, the precision is actually in microseconds, in micro pennies. So you cannot, even the 1-minute chart, it's not that precise. But the thing about our human eye is that we cannot perceive anything even less. It's difficult. I don't want you to look at the second charts or the tick charts. You're going to make more mistakes than you should, right? So you see it's wicked here, right? If you truly want to be looking at the chart at the point in time, this is completely rejected. So the price range was actually probably at this range here. So it shows that we have closed the cup at these two particular wicks here, right? So once again, price is always a range. I always tell you price is a range. You can't have millions of people agreeing on a price to the penny. It's very difficult. And that's why with algorithms now running the market, this is to our advantage. We can define things to the penny because it's the algorithms that's running the market, no longer human beings. So this is great, right? But otherwise, if we allow human beings to be the one trading, we will never have a perfect to the penny like this. Right, I consider this a cup close, right? So you see the cup has closed right here at this range, and we had a handle that formed, and this handle was pretty handy here, right? Because we had that teal. This was a beautiful inverse head and shoulder pattern. You see this. Now this is a proper cup and handle. Now this is probably one of the cases where you see that the cup is perfectly closed. That's fine, acceptable, right? But not always the case. because you notice later I will be explaining something else to you. So when you see this, absolutely beautiful, right? But we started tapering here at this magenta, and there was a lack of buying continuation. So you look out and you zoom out a little bit and you wait for the larger cup to close. And in this case, yes, the larger cup has closed. This was supposed to be a resistance, but now should be turned into a support, right? So this would be ideal. So you wait for the cups to close and you wait for a second handle here. And you notice, and I want you to see it step by step. So I want you to be ignoring anything after this. Not yet, right? Just here at this point, anything before this. Now imagine you're following the market and this happened so far. You close the larger cup, right? So first we close a smaller cup to the penny. We had that beautiful buying continuation, the breakout, but that breakout lacked strength. So the market needed to build more strength. The bulls needed to build more strength. And so they need to build another handle here from a larger cup that closed. So far so good, right? And you see the handle starting to form here. Right, so this is beautiful actually, because this was a support that that came from a resistance, right? And you see it happening. You see the pink algorithm building liquidity, mind you, to the penny, and if this broke out, this would have been absolutely ideal. But guess who protected you from taking a heavy long here? That's right, your pink algorithm protected you. Even if your pink algorithm did not protect you, your magenta should have protected you on the upsides as well. So there you go, having that penny perfect algorithm to guide you, and especially with the orange here. Now, I would wait for breakout and retrace here, isn't it? No surprise. This is a new knowledge to you if you've followed me for a long time. And so, this is why you need to trust and you plan your structure. So in this case, you do not break out from that. Now, what happened here? The bulls just lack strength. The bulls have closed the cup, soak up the sellers, right? And then created a very beautiful structure. I would think this is a very beautiful structure, but it just lacked the strength out here. And I talked about this on Thursday. I mentioned, as much as the pink algorithm is controlled selling, which means most of you will associate this pink algorithm as a bullish algorithm. You're not wrong. It's a bullish control. But it's, after all, don't forget, after all, it's a selling algorithm. It's trending down. It's a selling algorithm. Yes. And this is a resistance, which means there are sellers at this range here. So are you surprised that they started selling at the resistance of a selling algorithm? Absolutely not. So why most of you buy calls here? You're doing it wrong. I've always told you, buy calls here. It's different. You see the difference here, right? Breakout retracement is slightly different. So if you have this very bad habit of anticipating breakouts, taking calls at resistances, taking puts at supports, you are going to end up very, very disappointed in many of your trades. And you realize, and you're always asking me, why am I not doing well? Now you have to look out for precision algorithms here too. The precision algorithm, in this case, the orange bar, has appeared. You see it happening. It has appeared. So you can afford to wait for it to appear. If it's appearing before it breaks the resistance, if you want it out, it's going to continue appearing after the resistance, isn't it? It certainly will if it's going to break out. And so this is the logic behind it. All right? Now, if you take puts here, you're also risking a lot of things. Because firstly, this is a bullish structure. So taking puts here, you're fighting against the trend. You need a confirmation this is heading down. Now, sometimes you do see some candles, you do see some orders that's coming in. In this case, there is a certain strength here, right? Now, I'm going to show you the strength that's forming here. Now, the strength will be formed here. Now, if you truly just charted this a little better, you do realize it's penny perfect here, right? So you have to continually chart. As I mentioned prior to this, if you wanted to chart the algorithms, it will be like that. Because the price, and I will teach you this in another theoretical course, right? This is just mathematics. But you have to choose the algorithms that will assist you in your trades. That's why you don't over scribble on the charts. Right, now, at this point here, you don't short this as well. It's slightly dangerous. Unless you see the selling algorithm, in this case, that blue algorithm starting to appear. Now, the blue algorithm started to appear here. But if I were to truly want to short this, I would have taken it at the break of orange, after seeing the blue has appeared, and not here per se. Understand that, right? Because this has still a bullish structure. Now, there are times where you notice some of my good trades are when there is a bullish structure, it breaks out, fail to break out, and it grabs the liquidity on the way back down. I always call that a lack of continuation trade, and usually my best trades are like that, right? So you see, I'm not too fixated on a single direction. I'm always looking out for liquidity, and therefore you know how to take a trade when there is a lack of liquidity or a lack of continuation. You go search lack of continuation, go to the search bar, just type lack of continuation. You will find many examples that I talk about that my trades are based on. Because lack of continuation will build a lot of more liquidity than usual, because it stop hunts you, right? Stop hunting is a very, very common way of building liquidity. When you have that, it travels further. Now, one more technique here I want to teach you, and that is the break of support. This is not new, right? So you see, this is a failed cup and handle. But the market tried. And you're able to tell that the market tried. And you're able to tell the confirmation that it's going down, because the aggressive seller, in this case the blue, has appeared here early. It has appeared early, and it appeared later as well. But the bigger confirmation will be here, at the break of this pink support. Now, once it breaks the pink support, once again, a support turned into resistance. This was supposed to be the handle. Now, if it broke down in teal, that's still acceptable, right? If it broke down in teal, fine. It's still part of a dual algorithm setup here. But what did it break out of? It broke out of that in blue. Strong, very strong. It's triggering stops here. But anyway, these are advanced techniques that you have to practice and get better at. But in this case, the trade was simply just wait for 20 days to retest, because you will have that inverse cup that started closing and then waited for magenta. Very simple very simple head and shoulder pattern with the blue precision algorithm. Nothing's wrong with this. You can just set alerts here. Let the market and the bulls and bears just jink it out here, right? And then you will take a trade when they're ready to make a decision, because you see that the bears have won. You understand that? You don't have to be forcing trades here, right? But I'm teaching you how to see this as you practice and get better, because eventually you need to be able to take a trade anytime you like, anytime you want, and be able to make some pocket money for yourself. Call it a day. So you decide to enter the market, you study the charts a little, you chart a little for 5 to 10 minutes, and you decide, okay, I'm going to take a trade here. I know how much profits I can take from this trade. It may not be a full move, but I can probably take a few $100 from here and then call it a day because I'm busy. And you do that. That's the type of skill I want you to have, that you can report in at any time of the day, make sense of the charts, know your risks, know your rewards, take your money, Get out of there. Go enjoy your life. Yep. Give me a minute. Well, I overestimated my recovery. It's not as good as I thought. So I apologize if I have to just mute for a while and start coughing. I don't want to burst your eardrum, so I have to be ready to click the mute button when I should. Now, this technique here is very simple because, as I mentioned, there were stop losses that are triggered. And so you see, whenever you see a break in the algorithm, usually the strong precision algorithm must activate. If the strong precision algorithm does not activate, these stop losses are not triggered yet. So in this case, you see 2. The support has turned into a resistance, right? Now, why is the pink a support? Because the pink has built that cup and handle, which is a bullish structure. So it's supposed to be a bullish control, and now it has turned into a resistance, especially when this was the support line. Turned into resistance, so all the buy orders have become sell orders, right? And it has activated strong precision algorithm, and that is a sign of triggering stops. You trigger your stops, you get sell orders. It makes sense now. When you trigger stops, if it's a support, you have buy orders, right? And so when you trigger the stops, they become sell orders. Whatever that's supposed to be bought has triggered to become sell. You understand that? Okay. No, this was a beautiful trade. I talked about this in the live stream on that day itself. How a precision algorithm that appear in power hour, it's always the most profitable trade you can take. And this, we had to beautiful retest of 20-day moving average, giving you that alert that you needed, and to see magenta coming to play, right? Because we know magenta was the tapering algorithm. So this was a beautiful trade on Thursday. So far, so good? Yeah. Now, these are the things I'm going to talk to you about every day, converting the theory into practical, so you can have a deeper understanding of what to be expecting here. Right, so just today, we learned a little bit about cups closing, right? We learned a little bit about support and resistances. I will go 10, 20 times deeper than this in the course. So you have to get ready. I will ease you in. Right? I will not, hopefully I don't need to go into complex mathematical formulas. But if there's a need to explain a simple concept with that, I may do that. I try not to. I'll keep it simple, so it's easy for you to understand in layman terms. And that's the best way to learn, right? Keep it simple, you will learn more. If you want to learn more complex stuff, you can always enroll into a proper institution, a college, and learn the complex stuff. Yeah, that's what I will hope from you. Learn from a proper professor regarding the more complex stuff, yeah? Now, this was Wednesday, and I warned you about this magenta, so just keep in mind for this. I will talk a little bit about that. Now, this is Wednesday, right? So, yeah, you can see that Wednesday. So, I want you to keep this in mind, right? This will come in handy. Yellow 680. Nothing much to talk about on Wednesday. Just this part. If you have not watched that live stream, I will repeat it again. Don't worry about catching candles like that, because I've shown you, I've caught the candles from here after the first one, yeah? And I saw this green precision algorithm, right here. I had a 10x trade just like that, right? Even though I missed the first candle. So if you're thinking of catching the calls here, you're gambling, right? You're probably gambling, or you have very advanced risk management concepts, which I talked about in terms of a strangle. how to protect your strangle even in a small range, which is manageable because you have penny perfect magenta. When you have penny perfect algorithms like that, you can open the protected strangle. Absolutely. Right? But as I told you, pre-surgery, I would have certainly done that, but not post-surgery. And it helped me understand a little bit on how you may be trading, not at that intensive level, not because of your skill, but because of your time constraints, right? So yeah, I think my surgery has helped me normalize. I think it's something that God has put me in the path of so that I can have a better relation to impart you the skills that can be more applicable in your daily trades. So I thank God for that. Everything happens for a reason. So yeah, don't be worried about catching the first candles, right? Yeah, this is still doable, right? It's likewise for Liberation Day. There was this 50-point SPY day, isn't it? Guess what? I missed this at the start, right? So I missed the first few candles, but I still make 6 figures for the remaining. I think it was up to here. I think the first candle was about 20-30 points, right? And then it remained the balance 20 points. So I caught the move after the news because this was mostly insider trading allegedly, right? And I still made 6 figures from that, right? You can check it back. Check it back. Everything is archived. Just search it, right? So you don't have to catch the main move sometimes. As long as you know what you're doing, you plan, you still can be making good money. All right. Now, let's take a look at Tuesday. I want to see if there's anything I want to talk about here. Now, Tuesday is another day. You can hear I'm still having a cold. Just congesting up now, right? It's getting harder to talk now, but I will do my best. Let's see. Yeah, Tuesday was a case of tapering here, right? I want you to see it once again. Now the cup has closed. Yeah. So when the cup has closed, what are you looking out for? You have to always be sure you have to look out for the handle. Now, as a newer trader, I'm trying to understand your psychology. Some of you, and it helps me when you share your trades. So share your trades. I can relate to you better. I can help you. I can find explanations for you, right? So please share your trades. It helps me to see things at your point of view, so I can explain things at your point of view. For newer traders, when you see cups close, you assume it's going up. You see, that's the problem. It is not cause and effect for trading, because when it comes to trading, it is a live auction, which means that at any point in time someone can dump it, at any point in time someone can buy it. So what you need to be understanding is how to be looking out for that buying and selling and joining in that buying and selling instead of predicting what's going to happen. You see the difference there? Sometimes you can predict it. Yes, you can. Sometimes it's that straightforward, and you put in measures in place to do that. But otherwise, you cannot see cups closing, and when you see that it's building liquidity, what do? You just buy a call. Now you're going to get disappointed because you notice many people, the reason why this went down, I can tell you, is because everyone bought calls. When there is too much orders here, say there are many buy orders here, right, including calls. The sellers notice that they want to trigger your stops and head it down if they want to bring it down. You realize that's the problem of having a live auction. So if you are paper trading, you're not entering your orders into the exchange. You don't understand the consequence of your orders, right? So there is a reason why I keep telling you, if it's selling, for example, in the precision algorithms like that, if it's selling, you do not buy when it's in the strongest. Because when you buy, this sells even harder. That's the thing about real trading, right? You buy here now, you become exit liquidity because many people are starting to sell. The reason why the precision algorithm was activated is because it probably has triggered a lot of orders. And so there are a lot of people who are attempting to sell, but their orders are probably not filled yet because they're looking for people to buy from. And if you call the reversal here and you buy, you're actually facilitating the selling. That is known as exit liquidity. So the practical concept of that, as I told you, do not call the reversal when it's in the precision algorithm. Yep. Now, when you understand this, you will know that when I close the cup here, you be careful to not to be just assuming that's going up, because you notice that the stops got triggered at this point, at this level here. Now the bulls tried, right? Bounce, 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 bounce. You notice it bounced many times from here. But at that point, what did it really form? Notice, what did it really form here? Yeah, it formed a wedge, exactly. This is not a good wedge. This is not a bullish wedge. Why? Because volume is heading up. Now, if you take a look at the 5-minute chart, you will notice that volume is increasing. This wedge goes up if this volume goes down. This wedge goes down if this volume goes up. Okay, very simple. I will be explaining more about that theoretically to you, but that is just a very simple explanation. Okay. Now, volume is not always a leading indicator. Many times it is a lagging indicator. Many times. Because, firstly, you have to see it. The volume has to be weighted. It has to be a weighted volume. And so my technique to that is to look at the 1 minute, 5 minute, 30-minute volume and come to an assessment. And that's how I weight it, right? That's how I average out the volume instead of depending on a single time frame. I will teach you all these techniques, right? Now, there's no need for fancy data, or just looking out at Now, there's no need for that, right? I teach you techniques that you can just eyeball it and have a very good sensing and then just manage your risks accordingly, right? Wedges are great. I don't mind wedges, right? But you have to know what kind of wedge you're dealing with. So just be more mindful. In this case, we had magenta, so it helped you in your understanding as well. Right. In fact, magenta was a better wedge because this gives you that, right? And likewise, again, I told you to wait for the cup to close. And you see the cups to close again. Once again, beautiful inverse cup. You notice the inverse cup was slightly also spilling over, right? And then we formed that beautiful handle on the way down. This was a beautiful handle because magenta led that handle there, right? So a cup, once again, no handle here, broke the stop loss from support turned into resistance, right? And the counter was that head and shoulder pattern with that magenta. Even if you miss this magenta break, absolutely fine. Wait for the inverse cup to close, and you see magenta was building very clear liquidity, and the stronger algorithm appeared, breaking below. Absolutely beautiful. This was Tuesday, I think. So do check out Tuesday live stream and analysis. It will make more sense. I've already talked about this on Tuesday, but I want to be using this to explain what I talked about prior to this. Okay, I need to take a couple of minutes break. sorry for that. Feeling a little lightheaded now. Well, I really underestimated my recovery. I overestimated it, I mean. Give me 3 minutes. I'll just go I'll just go freshen up a little bit. Yeah, I'll see you shortly. Just see you in a bit. All right, thank you for waiting. Now let's get back to this. Yeah, you like what you're seeing? This is this course will be 10 times more in depth. At least 10 times more in depth. I will be touching a lot more. So stay sub, please. Don't lose your subscription. Link in the description below. Or stay sub to the Discord server. The course will be absolutely free on top of your sub. But otherwise, I will be increasing the sub to a separate tier. There will be a course tier. It will be at least twice the price. So you get it free now if you sub. So please do. It's my commitment to you for the year. I want you to be doing well. So I'm truly pulling everything I have out of myself to make sure that you have no more excuse. No more excuses, yeah. So much more in depth. I will truly give everything I have for this year to ensure that you have no more excuse. In the event I die, you have at least everything I have, so you're gonna be fine, right? Skills will last forever. So let's try to make that happen this year. All right. Okay, let's prep for the week. That's more important. You know what's happening this week? Yep. FOMC on Wednesday. So, Powell's going to speak on Wednesday. Probably a nothing burger. Right, market already expect that there is nothing that's going to happen this week. Uh, so, well, let's prepare. I worry about this wedge here. So this is the wedge that I worry about. Market has built liquidity here. Right now, the White House has introduced 100% tariffs on Canada over the weekend. So I think at 6 p.m. later, the market may open lower. I don't know. We'll wait for the market to open, and then we'll prepare accordingly anyway. So you don't have to worry. There will always be a preparation you're ready for. But what I want to tell you is that there is liquidity here, and there was liquidity here that was built on Wednesday. Let's go to Wednesday for a bit. Wednesday, where are you? This was last Friday, Monday, Tuesday, Wednesday. Yeah. So remember the Wednesday liquidity? I talked about that very beautiful yellow 680 level. So I want you to watch out for that here, isn't it? Right? So this is the liquidity I'm talking about. The market wants to head down, right? This is beautiful liquidity to head down. Just in time Wednesday afternoon, right? So if the market's kind, we get that. Otherwise, wait for cups to close as always. Now you will always get your trade entry. There will always be something to prepare for, so don't worry about that. Right, if it wants to head down early, there's this orange here, which I think we will already, if market goes down early, we would have already taken that. So this is what I want to see, right? Especially from the previous highs here at that 685 yellow. See, penny perfect, isn't it? So watch out for that. If it takes a little longer, it may take a little longer if it wants to, but otherwise this is a very beautiful area here. If it heads down early, watch out for the green. I want to be looking out for structure here with the green selling. So this range to this range is where you have to be very careful. Right, what you need to look out for is using the 5-day and the 20-day as your guide for structure, your precision algorithms, and if possible, this orange can retrace back as some sort of resistance that will be absolutely excellent here, especially in the green if it wants to sell off that previous high at 685 yellow. Right, now otherwise you notice that magenta is building liquidity, and that penny perfect green, isn't it? Penny perfect, building liquidity here. So if this wants to build liquidity for this, it's also absolutely beautiful. So just prepare accordingly. This absolutely beautiful liquidity here, but a larger test will be the cups. There are hot sellers at this level. I want you to see, right? We have not broken out of this particular level above 695, about 695-ish, plus minus 2 points. There's very hard sellers here. So if the market wants to break out of this range, it will certainly either close the cup or a beautiful breakout and retrace. Not that much breakout, slightly breaking out and then retrace it back here to head up again. Now by then, a 5-day will be providing more liquidity as well, and your upper Bollinger will obviously be trending up here. So you see the plateauing again in time for FOMC. So that's great, giving us targets for our strangles if we want to take them. Right, so just pay close attention to these particular levels here. Right, but otherwise, just be more mindful. And you notice even if you're trapped in this range here, right, this is a very small range, isn't it, in the grand scheme of things? But just take a look how much profits you could have made this week anyway. So many of you did so well this week. Absolutely amazing, right? Because you've learned to identify the algorithms and find profits in the charts, even though it's such a tiny range here for the day, for the week. So don't be too concerned about where the market is going. You're able to find profits in the charts as long as you train your eyes to look out for it. Right, so pay close attention, magenta here as well. Right, so Nobody knows where this is going, as you can already tell to the market can price in certain things. So the market is priced in that there will be no rate cuts this time, but it's the guidance that everyone's interested in, right? And obviously Powell's term is ending, so obviously they want to. The past two FOMCs have been very determined by the dissent vote, right? So they have been paying attention to the dissent because a lot of votes are not unanimous. And so I will guide you along again Wednesday. I will brief you Wednesday. I will also prepare you. We will find profits in the charts nonetheless. So once again, stay focused. Just tune in, right? The daily analysis, do your homework. You'll be absolutely fine. Okay, now let's answer some questions before I call it a night. I mean, a day. Let's see. Okay. Once again, live stream. Q&A here. I'll spend the next 20 minutes. So let me just read them quickly. So come in. Fill in your questions, right? I will try to see how much I can answer. I need to fix my screen for a little. It's flickering. Give me a minute. Right, let's see. Yep, good morning, guys. Yes. No, not yet. I will get back to you. Don't worry. No, don't worry. I will not leave you behind. Okay. I will inform you once I sent out an email. Right. So I will inform you. Sorry to keep you waiting. Yeah. Thank you, sir. Yeah. Cool. Yeah. Too cool now. That's too cold now. Yeah. Stay warm, guys. Yeah, thank you. Crazy, yeah, crazy. Just stay safe, right? Yeah, money you can lose, all right? If you trade with money, you can lose. Now, the point of psychologically, it's like this. You have to plan your trade ahead. If you know that your red trade, right? So say I have one trade. My first trade is red, right? So you lose about $500. Just a number, just an arbitrary number. If this is more money you can lose, you are never gonna make the second trade well. But if your usual trade, for example, is your usual profits is $1,000 to $2,000. Right? If you lose 500, you know that you're gonna make it back in the next trade anyway. Right? Psychologically, you're still winning. Right? So stay winning. Some of you enter a trade just to lose, and that's what I mean. You enter a trade knowing that if you lose this trade, you're going to lose the entire game. You don't do that on trading, right? It's so sensational, right? You think that every game has to have a clutch moment. Every game must have a final second short that goes in. You see the problem with that? That's sensationalized. Do you know that there are probably 1,000 NBA games, and out of 1,000, maybe only one game has a clutch shot at the end? You see the statistics there. But yet, the TV will always be playing that particular shot, making you think that every game's like that. So that's just, okay, that's not the actual statistics, not 1,000 to 1, but you get my point. Right? So your mind has already been thinking about sensationalizing your day, that you forget the bread and butter of what you need to do on a daily basis. And that is why rules are so important, because once you have rules that have embedded into habit, right, you will never deviate again from that. So that is why creating habits for yourself is very important, especially if you're a young man or woman. When you're young, you don't realize that, right? Many people tell you to have good habits, such as reading. Reading is very important. Because when you reach your 30s, for example, and if you do not have a habit of reading when you were younger, and you suddenly have to read 600 pages of reports, you can't do it. You just can't do it, no matter how much willpower you devote or how much coffee you drink at that night to try to read. You just can't do it. There are things in life that is not a matter of want or do not want. A lot of things in life comes from training, comes from habit, and you can tell. You can tell that a person has been through training. You can tell that the person has got a regiment that has made him who he is today. Trading is the same. Rules are the same. All right? So get your rules in order. Get your habits in order. Trust me, over time it will show. Over time it will be part of your identity. But before that, rules such as this, right? And that's why I always tell you the rules, you have to set it properly. If your red trade is something that you cannot recover, it doesn't matter anymore, right? Your next trade, you're going to take more risks. The next trade, you will be completely deflated. You have lost your ability to think and properly make a good trade. So yeah, keep your trade small, scale down. So the secret is scaling down. Develop your habits first. That's very important. It may not make sense now, but I want you to, if you take one contract, one trade, fine. I want you to extrapolate that, because eventually, if you're like me, I take about, my average is 20 to 50 contracts of SPX, right, thereabouts. So it depends. If you want a larger range, is between 10 to 50. I never take more than 50. I try not to, unless there are times I do, and it's maybe 10 cents, 20 cents. So there are times, yes, I do that. But generally, between 20 to 40, not even 50. That's my average size when I scale in 20 to 40. I want you to extrapolate, right? So 20 to 40 in terms of SPY is about 200 to 400. If you take one contract today, right, I want you to have a target. You're going to take 100 contracts in future. You just have to multiply it by 100. That's your potential earnings that you will be making if you scale incrementally to that level. So even if you're making, for example, $43 in that trade, right? I want you to extrapolate it 100 times, because that's the goal that you want to be going. You'll be making actually $4,300 on that day for just that one trade. Now, does it make sense? You see the power of that, of scalability. And that's why when you learn a skill, you need to be learning one that can scale, a skill that can scale. That's why it has to be stackable. And that's why it's not something that you have to build and dismantle and build and dismantle. You have to build it one on top of another. So many things that you learn in trading is so fragmented, right? They don't come together. Right? So you're not stacking up your skills. You realize that when you watch signals. That's why signal groups are absolutely trash to your mind and your trading levels and your skill. Don't fall into that trap, all right? Or even there are traders out there who you think are doing well, but they are not, right? Because they cannot put things together for you. So just be careful, right? Have more discernment. Okay, when you understand that, you know how to scale up and plan ahead, you'll be fine. All right. All right, next. Yeah, actually, I'm thinking within 3 months. But there is this, remember I used the word practicum. There is this component of it that has to be done on a regular basis during trading. So it's obviously a much more comprehensive course than just 3 to 6 months. So I would guess it will last through the entire year. So probably entire year. I try to sprinkle the theory component in a more organized fashion on a weekly basis. I want to cover that quickly, but I don't understand yet whether that may be beneficial to most of you. So let me gauge it accordingly, but nothing's changed. I show up every single day, and my job every day is to make you a better trader. So that's what you need to commit with me, right? That's the point of it. So you notice that my concern is not the course. My concern is you. The course has to be built around you, and not just me trying to dump all the content on you, whether you're learning or not. So I think that's slightly different, right? You see, my approach is a little different, but I show up every day, all right? Learn with me every day. You're going to learn something. Thank you, guys. Yes. Technically, today is not the second lesson. You notice I didn't title that. This is just a little practicum, and also because this is a live public link, I want to whitelist the course so that only members get to access to it. So this is technically not the second lesson, but if you consider this a lesson, you notice how much more in depth I will go for the course. So please do sign up. It's free for you now if you sign up, but otherwise I will make it into a premium tier. You will pay twice the price just to have access to the course. I don't want that, so please do sign up now. But I need a cutoff, right? I have to be rewarding the people who commit early. That's why I have to do that. It's just part of it here. Yeah, thanks, guys. Yeah, yeah. Cheers, man. Good people around, right? Good people around. Yes. The short answer is yes. All right? Short answer, yes. Yes, it's always at a range. So it's not always at that point. Yes. And that is why you notice the algorithms come to play. Now, this is something basic about the algorithms, right? Why do the algorithms exist? Because buying and selling is not always at the same price, right? You always got it wrong. You learned it wrongly when you learned support and resistance is always that level, a flat horizontal level. You learned it wrongly. Someone taught you something wrong, yeah? Now, the point is, you see, this person here is buying at a lower price now because it has ran out of buyers at this price. Remember, buyers want to buy it at a lower price, and so now they are buying at a lower price. Nothing wrong with that. So you see, there's more buyers at a lower price now. That's why you see it bounce up back in. But it's only buying at a certain range. In this case, the range is capped by the resistance. So likewise for sellers, right? They want to sell at a lower price. You notice? Sorry, they want to sell at a higher price. So now, scratch that. They want to sell at a higher price. And so you notice this is known as a bullish control because more buyers dig in at a lower price, less sellers dig in as it's trending down as well. So technically speaking, this should be heading up, right? But obviously I talk to you about the conditions. And don't forget, this is a resistance. So until we have this, where the support came from a resistance, right? You know that the people who wanted to sell here suddenly turn into buyers, right? So more people are supposed to sell here, but no, they have turned into buyers. So therefore, you know that it is breaking out here. So cases where there is a breakout of the algorithms is where you know there are triggering stops. So this is very precious, right? So you're asking, right? Correct me if I'm wrong, but you're asking, why is it not at a fixed price, and there you go. I explained it to you. Nothing is ever in a fixed price unless, as I mentioned earlier on, you have unlimited buyers and sellers at a range, right? Because there is a fixed price there due to a catalyst, for example. Now that's the instance where you have a fixed price that is more relevant. Otherwise, usually handles are, in this case, always trending down and rebuilding liquidity, right? Hope I answered that. I will cover that more, obviously. Both, why not? Even for volume. Do you know that you can set alerts and volume? Right click, add alert and volume, right? So yes, both. Algorithms, levels, volume. Why not just set alerts? Alerts are free. Set them. Wait for precision. Know that there will always be a trade ahead. Maybe to help you, you get burned enough, you will stop touching fire. Yeah. So that's, some of you have to learn it that way. I noticed some of you have to learn it that way. So just don't go too crazy while learning it to the point that you permanently burn your hand and you lose all the nerves in your senses. Now that's not great. But otherwise, wait for precision algorithms. Wait for breakout retrace. Otherwise, there's always another trade you can take. Now, the thing about breakout is this. If the breakout fails, now let's see. Let's find an example here. Probably not this week. Let me try to find another week here. This one, perhaps. If the breakout fails, right? Usually, it's the lack of continuation. You take the reverse trade, you make more money because it has stop hunted you, right? So if it fails, it stop hunts. So why are you so fixated on catching the anticipation on the break? I want to see if it truly breaks, because if it doesn't break, I'm taking the other way down for a zombie. Zombie plus stop hunt plus reverse trade. Look at how much more profitable this could be, right? Because you are not over anticipating or hoping for the move. Understand that, yeah? Or sometimes, say you can get a call here too, right? But you know your risks. You know when to stop it. When it fails, you stop your trade. You know it's going to go reverse. You immediately take the reverse trade and you score. You make more money even though you were initially wrong. Practice. Do not be too concerned with where the market is going. If you're so focused on just up and down, you fail to realize the most important thing you're doing when trading, and that is to make money. Look at money. Look at profits. Don't look at direction up and down. Yes, and liquidity. Yeah, all right. Yeah, lack of continuation. People are answering you. That's great. A 30-minute chart. Yes, a 30-minute charts are very important, right? You realize the big moves always come from the 30, and I always tell you that. But it's so difficult to take a 30-minute trade early because your stop losses will be so huge. It's impossible. So 30-minute for context, 1 minute for your execution. Yeah, right. It's going to be more. Trust me. Yeah, I have to protect the secrets, if I can call that. So I cannot be streaming them in the public server like YouTube. Yeah. So yeah, strong precision algorithm, right? You know that particular. Now remember, when I start the day, I'm looking out for precision algorithm. You know that there is this strong seller or strong buyer that is participating in the market. You want to be part of that person. This person is probably selling, for example, $900 million worth of contracts, right? You're tagging along to capture that 0.001%. That's good enough, right? It's good enough for me. I don't know if it's good enough for you. So that's the point. You know that this person is coming. If he's coming with the precision algorithm, he's probably dumping or he's probably buying a huge amount. And I want to know he's appearing. I just follow behind him, right? I will follow his slipstream and just take what I can from behind him. Yeah, it's slipstreaming. Yeah, that's what you want to be doing by identifying all these big whales and being part of that. Even just for you, just need a couple of seconds of trade in their shadow. You're good to go. Cough is incoming. Sorry about that. Almost made all of you deaf. Okay, I'm stopping here. Anyone that asks anything, the next question I will still accept, but after that, no. Cheers, Ben. Well done. Now to take all your professional courses. Yeah. Yeah. You've got to share your chart so I have a better understanding what you're talking about. Share your trades. It will be much easier. But yeah, break of magenta is absolutely possible. This is a very, very common here, right? Stronger algorithm breaking out. But in this case, you have very little time to react. But if you see a strong buyer here, right? You want to see the buying persists because this is a catalyst. This is a news candle, right? So you want to look out for that. Now you notice it never broke out of that green. At this point here, if you see magenta starting to build liquidity, and I see something like that, liquidity built here, and this happened, yeah, I will probably be taking this. You notice the idea behind it, right? So you know that there are sellers here, but otherwise it's continuing in the green. I'm taking calls, absolutely, because it's a news candle that we're expecting anyway. Right? I guess this is what you're talking about. Yes, I will. Don't worry, you're not missing out yet. Right? You're not missing out. I'm not launching anything until I resolve this. So thank you for your patience. Yes, I will in due time. This is a little bit difficult, as I mentioned. Anything that comes with spreads or swings, you need to learn how to calculate yourself. The calculation is what will make you the master in trading options. Right? Day trading is easy because day trading, you resolve your trades within minutes. So you keep it simple. Not much calculation is involved. Just some basic premise that you have to first understand. There's basic framework, yes. But otherwise, you don't always have to be calculating your risks. Right? You see your risk visually, and this is what I mean visually. It's important. Within a second, you can tell your risks, and you can be able to assess your rewards visually as well. So there is a framework for day trading that you can resolve your trade within minutes without complex calculations. But when it comes to swing trading, when it comes to writing your options, when it comes to strangles, you need to learn to calculate it. So I will teach you that as well. It depends. Once again, I will teach you how to calculate instead of telling you what I would do. Okay, a big tip here, for me at least, what I do. Now remember I told you something about the refresh rate on your candles, right? So your eyes, just like a monitor, I've heard this somewhere, right? An iPhone introduced a higher refresh rate for their phones. But your eyes it's not high refresh rate. What was it? It was either the pixel density or the refresh rate. I don't know, either one. But your eyes can only perceive a certain value. Beyond that, it's pointless. Beyond that, your eyes cannot see more than that, right? So there's something like that. I can't remember. I think it was pixel density. So likewise in a 1 minute chart. you have immediate confirmation in a 1 minute candle on that 1 minute candle, right? So usually when I get in a trade, I try to finesse the trade in. So calls at support, puts at resistances. And if I can get calls at red candles, it's the best thing that can happen to me. Or puts at green candles. So you realize I have that little thing about that. You have to practice. And once it turns to my favor, you see, that's my refresh rate. If it's a 1 minute candle, I do not see it beyond the second candle. In fact, if I see it a full green, right, you notice the thing about candlesticks. When they start selling, they start to wick. You understand this, right? From here to here. Now, if you don't understand this, you need to have a better understanding of candlesticks, right? But if it pushes green, this is what your eyes can perceive immediately. Say I took a call and it shoots out green like that. I'm going to protect it immediately. I don't care. I'm going to get slippage. I'm going to make money from this slippage here. Someone's going to slip from this and I'm going to make money from this before it starts wicking. Why do I have to wait for it to wick before I take my money? If it continues to strike further up, that's fine. It's fine. Because this is what my eyes can perceive at that point in time. And it's as good as it gets. Right? That's the beauty of trading a 1 minute candle compared to your tick charts or your second charts. Because second charts, you don't get this. You don't get this sort of confirmation. And that's why if you're trading the tick charts, if you're trading the second chart, I refer you back to the 1 minute chart. Because this is the best refresh rate you can get. For a 5-minute chart, you don't get this. 5-minute chart is too slow to give you feedback like this. Right? So you notice I always protect my trade once I see a full candle. Immediately when my eyes can perceive it. Right? And I make money from people's slippage. Before it starts to wick. Because that's the refresh rate my eyes can perceive at that point in time. You're not going to learn this anywhere else, right? Because these people that teaches you don't trade. They're not going to teach you all these practical things. Understand that now? Yeah, you're getting it free now on YouTube, right? Or even know the link here. But I'm going to teach you even more. Teach you even more, right? I hope I answered your question. Yeah, thanks guys, yeah. Yeah, so you see on Friday, this was Friday, right? Yeah. On Friday, you already saw this, there's this person that's buying, right? Whoever that is. I don't care. But you see him appear. So when you see him appear again, you know, especially on the breakout of that cup and handle, yeah, he has appeared again. I'm going to tag along, right? But you notice that he has not appeared more than that because it has tapered to that orange. And this is where after which you got to see the chop. So yes, you're probably trying to say that this buyer has appeared, right? And that's great. So yeah, I'm not going to, I will teach you what I teach because it can be compounded. I will not, I maybe will have reaction videos in future to try to implement my teaching on what someone else is trying to explain and see if it's similar. But I'm not going to use another person's techniques and put it on my own. I'm not going to do that, right? I'll teach you what I'm teaching you. But maybe in future I can have reaction videos where I will react to them and tell you what I think about it and whether it's applicable. Right, so I think that will be better. Start by showing up every day, and yeah, obviously there are, yeah, read this first, I'm a scammer, read all these, yeah, especially I am a scammer. This is very important. Read this, all right? I am a scammer. There you have it. That's your soundbite. I am a scammer. Read it. Read it. This is very important. Read this. Yes, it's good if you have a 5-minute chart open as well. I've already talked about this. Watch the previous live stream. If I don't answer you, I'm keeping track. I will be talking about that in future. It means that I know I will be talking about that in future. So don't worry about that, yeah? Or it's something I cannot immediately answer you in a sentence. You just need the charts and the algorithms if you truly want to answer, right? It's keep it simple. Yeah. Thanks for tuning in, everybody. Yeah. Just send your regards. Just make sure that you know that he's being remembered and loved. Yeah. Now, as I mentioned, volume can be very, very, very misleading because it's hard for you to interpret whether it's a leading or a lagging indicator. The thing about volume is that it can trigger, someone can just decide to buy at that time. You'll notice that. So the volume is not truly a leading indicator. Not always. That's the problem with volume. So I don't want to go in too much, but you do need to have an understanding of how volume works. So yes. So as I was mentioning in the previous day about the descending wedge, right? I said it's a descending wedge and there's a lowering volume, this goes up. If it's a descending wedge of increasing volume, this goes down. So that is the basic understanding. You need that on top of knowing that volume can be a lagging indicator. Yeah, the strength is always in the breakout, whether there is a precision algorithm, right? That's the easiest way for you to assess. Practice share trades, right? It's hard for you to say this. When you say this, I don't know exactly what you mean, right? As much as I understand what you mean, I cannot pinpoint, and this is why you have to share your trades. You have to paper trade. You have to look at other people's trades, right? But the general idea is calls at supports, puts at resistances. You'll be fine, right? Even in breakouts. Calls at red candles, puts at green candles, if you can help it, near the support and the resistances. I will teach you that. The short answer is yes in the course. But yeah, how am I supposed to answer this at this point in time, right? So yeah, I give you my answer for that. Full candle, right? As penny perfect as our algorithms are, you try to wait for full candles or structure to start building. So for example, this instances, they're just too perfect, right? So in this case, the full candle is not broken out yet. You see wick down, but this has started building back up. So I want you to run through this with me at that point. Right? Say I took a break at the pink, right? Because this is penny perfect. Now, if it broke out here, will you take a trade? No, I'm not taking this trade yet because the full candle has not broken out and I have to identify my precision. So this became my precision, right? And after which, this second candle here, it started bouncing off the blue and the pink. Now, this is probably where I would enter. Or the next one, that's fine because you already saw the pattern that's being formed with the blue algorithm. So you will take calls with the blue algorithm as your stop loss. And you notice you would survive this, you would survive this, you would survive this. This red candle may scare you a little, but you will probably be already protected. Because by then you will be protected. Remember, one large candle, I would have taken some profits to protect my position, right? And then I can allow the runners to run like that. So this is an example, right? You note for the breakout, the precision algorithm here. More importantly, you wait for the full candles to form. So in this case, this is a good example. You have to learn to put 2 by 2, right? So if you look at this like that, 2 1-minute candles, you look at this like that. But if this is a 2-minute candle, you will see a full candle here that broke out. The full candle broke out of the range. So this is why you need to read candlesticks. When you read it in a 1 minute candle, you must be able to combine them together, because a pattern for a 1 minute candle is very different from a pattern from a 5 minute candle, right? And the thing about 5 minute candles is that it starts at 9:30, so you have 9:30, 9:35, 9:40. But a 5 minute candle, why can't a 5 minute candle be represented by 9:37 to 9:42? You see, this pattern is slightly different from a 9:35 to 9:40 candle. How are you going to interpret that? So you see, the thing about candlesticks is that when people say look at 5 minute candles or look at 30 minute candles, look at 4-hour candles, but they all start at 9:30. So, sometimes that pattern from 9:35 to 9:40. Now let me just do a quick one here, right? 9:35 to 9:40. Right. There you have it. 9:35. Okay. So this candle here will look like that, right? From 9:35 to 9:40, your 5 minute candle will look like that. It's probably a red candle. Sorry, it's red candle like that. Okay, this is your 5 minute candle from 9:35 to 9:40. But from 9:37, say I want a 9:30, let's say I want a 9:38 to 9:43 candle, right? That 5 minute candle will look like this. Look, these are two 5 minute candles within just 2 minutes of each other. How are you going to interpret it, right? So you have to understand, it's not as simple as just looking at the candlestick. The interpretation of the candlestick in the time frame, not just a time frame, not just in terms of 1 minute and 5 minutes, but in terms of this 5 minutes, this 5 minutes, this 5 minutes, and this 5 minutes. How do you categorize it? Structure, right? Understanding the structure within this 5 minutes matters, because let's say I want to wait for a handle here, right? Nothing matters here because this has already concluded these precision algorithms. So I'm looking at this particular time, and this particular time, the chart don't always give you a very good answer. So I like to look at 1 minute chart, and from there I'm able to combine. So you see, when you look at 1 minute chart, you can combine the 1 minute charts and come up with a 2 minute candle, 3 minute candle, 4 minute candle, 5 minute candle, whatever. But if I want to deconstruct a 5 minute candle, can you deconstruct it to 5 different 1 minute candles? You can't. I'll give you a 5 minute chart now. Take a look. I want you to deconstruct this candle into 1 minute candles times 5. Can you do that? Can you do that? Absolutely not. You see the problem with that? And this is why I like 1 minute candles. There you have it. Refresh rate of your eyes. Deconstructing it. Yeah, okay. Back to this. Yeah, you got this, right? Yeah, just take it easy. Take it easy. Yeah. Sorry, my voice is getting a little. Let me see. Yeah, get burned. Yeah, that is the secret to learning, right? Live life to the edge. I don't know how young or how old are you, my good man. Well, if you're using this handle, well, assume that you're, I don't know. When I see this, I think of the original Top Gun, right? Shows my age, yeah? So I don't know. So structure is very important. Depth of the structure. Very, very importantly, you need to understand depth of structure. This looks like a nice depth of structure. How do you represent this? Usually 30-minute chart, right? So now this is the depth. Let me see what's a good example here. Where was the last structure that we saw in the 1 minute? Now here, whenever I told you, you wait for a break, right? So you see we've been buying in green. Suddenly we broke out of green, right? So this particular candle here, this is a good structure here. When was this? Thursday at 2:30, right? Thursday 2:30. Let's take a look what's happened at Thursday 2:30. Thursday 2:30. Yeah. Oh, take a look. What happened Thursday 2:30? There you go. Right? The break of structure. So you notice, right? So the break of magenta, exactly. 2:30. Why this happened? Break of 30 minutes. So this is known as your depth of structure. 30 minutes means that there are 30 1-minute candles, right, in that one candle. So there is depth. You just can't tell it, right? And the depth is broken down like that. So you see very, very deep structure here just from that one break of the algorithm here. So understand that, right? So 30-minute chart, as I always mentioned, it will help you very, very, very much in your trade setups here. Yeah, certainly I will. Certainly. You've got to give me more. Prop firms I don't know, because you probably have lots of rules that I'm not sure with. I'm sure someone else can help you with the prop firms. But I always tell you, do not trade more than 4 to 5% of your account size. Your stop loss must be about that. Why? Because if you have a red trade, you know your next green trade, you can cover this back or more. So it gives you that psychological edge that you will not be afraid of a red trade. You notice that, because once you have a red trade, you know your next green, you're going to cover yourself. Right? So it helps you always stay ahead. Right? So that's the most important thing. Thank you, guys. All right. Okay, I'm going to stop because I mentioned I'm going to stop here, but I will record all these. And yeah, right. So that's right. These are important. Yeah. Not young. Yeah, I guessed it. All right. Thank you very much. I will log off in 5 minutes. Just going to catch up on some of the chats here. So give me a minute. Let me just catch up on the chat. Make sure I don't miss anything. And yes, that's what I mean. Yeah. Are you the guy that graduated with your finance degree? Was it you? No, it's not you. So yeah, I wasn't talking to you. But yeah, these are generic. These are generic qualifications. Anything you graduated from college with, it's generic, right? Education is generic. You only start specializing it once you go into more professional courses. Especially at a workplace. If you can get sponsored, your company hopefully pays for all these professional courses. That's why they're upwards of thousands, tens of thousands of dollars. So much more expensive than your generic education, such as your degree. So yeah, even a degree is generic. Sad to say, but all these professional courses, you will. Hopefully you get into a company that's willing to pay for you to upgrade yourself. Yeah, education is important. Yeah, but you cannot qualify for all these professional courses until you have that generic education. In this case, a degree is as generic as that. Okay, let me just catch up on the chat, and I'll call it a day for today. Thank you for tuning in today, everyone. I truly appreciate it. Sorry, I'm feeling a little lightheaded now. So, let me just catch up. Okay, I think that's it. I will. No, I think it will be back in February. So it's not gone, but I just have to be extremely careful at this point in time. That's why we have this second channel. But God always has His plans, so I believe in that, and it has showed itself. So this second channel turned out to be a blessing. That like I mentioned, if I didn't get my problems with the main channel, I would not have experimented with the live streaming. I would not have experimented with a lot of things in the past 2 months that has gave birth to a lot of future plans for me to help. So I enjoy being challenged, because I have no fear when I know who's in charge. Right, so I'll see you tomorrow, closer to opening bell. Let's start the week strong. FOMC on Wednesday, and that means Monday, Tuesday, you do not overtrade. Market may have a reaction with the tariff comment. We try to see what imbalances we can take advantage of, but don't overtrade Monday, Tuesday. Wait for Wednesday, there will be more clarity. Then we will see whether it breaks out of the ranges on Wednesday. And you see, the thing about Wednesday is that the implied volatility will be very high. So that's where you squeeze the premiums if it's going nowhere. And then Thursday, Friday, you have some clarity on the direction and whether it breaks the range. And then you decide from there. All right? Okay. Thank you. I will see you closer to opening bell. Thank you very much for tuning. I really appreciate it. Have a great Sunday ahead. Yeah, goodbye.